So let's again start with the digital assets report that was released in the US last week. So could you just tell us what does this report talks about and how important it is it for the crypto ecosystem globally?
Correct. So, as he's saying, the digital asset report is a follow through of what's happening in the US, where effectively this Trump administration is trying to make sure that two of the greatest technology improvements that are happening right now, one is AI, and the other is around finance, which is crypto. Both of those, crypto becomes a leading powerhouse.
Yeah.
And for that, they are just trying to create a structure that opens the economy up and allows private participants to come and start building things in the true US capitalistic sense. In that regard, for crypto at least, the first step was basically breaking down crypto into different pieces and trying to regulate those different pieces separately, because you really can't regulate all of crypto together under one license. That's impossible, and that's like saying all finance should be regulated by one entity, whereas that doesn't happen. Payments are regulated separately, currencies are regulated separately, security are regulated separately, and same is true for crypto. So what started off was, it started off with the SEC allowing Bitcoin and Ethereum and other such assets to be regulated under a format of ETFs.
Yeah.
That happened about, let's say, a year and a half ago.
Yeah.
That followed with last month, the Genius Act that created a framework for stablecoins to be regulated in a very specific format. And then this report is basically a lead up to what will soon be the Clarity Act, that broadly gives clarity on how rest of crypto needs to be, and rest of crypto and all digital assets need to be monitored, regulated, traded, transacted, and so on and so forth. It's a clear move away from this kind of regulation by enforcement, which is the policy that broadly US and the previous administration had regarding crypto, where they would invite people, they would get them to do conversations, and then next day the companies would receive a show cause notice from the regulator for violating some laws. So the idea is that they're moving away from this regulation by enforcement to giving very specific, to give very specific clarity as to what's going to happen. The report calls for the SEC and the CFTC to coordinate and take action and utilize their respective rulemaking and exemption authorities to create a structure for how various crypto assets need to be kind of sort of governed, monitored.
The report also talks about, banning CBDC and also promoting dollar-backed stable coins, and like you mentioned. So how do you see this overall shift shaping up, and also, a US act as a leader sort of in every sphere, and in crypto also it has taken a significant lead. So do you think that after, a Clarity Act and also subsequent changes and the overall regulation of the crypto landscape, more countries, including India, will take a lead from this?
Yeah, I think it's a watershed movement, to be really honest. Crypto has been around, the crypto community has just continued to grow, and they've always pushed for more and more and more regulations, because what regulations do is that they give good actors a framework to operate in, and it helps them create a predictable environment in which new businesses and new opportunities can be created. And all the inefficiencies that are currently there in the finance sector, it has broadly been untouched by innovation since the last, give or take, 30-40 years, opens up. And once that opens up, you can improve financial services, you can improve credit, you can improve underwriting, and all of that opens finance for more and more of the world. So I clearly see this as a watershed moment, this being a moment that 5 years from now, we will look back and say that this is a moment that changed the world of finance forever. Uh, and it will completely re-architect industries inside of finance and how they operate. Um, I think it is a great step for most of the world, not only for US. It gives a framework for all other countries to look up to and create standards with, so that they can be implemented world over. Some might be able to copy it directly. Others might look at some pieces of it and modify those individual pieces based on what their requirements are. I expect that this also gives clarity not only to the US but to the rest of the world also, as to how do you treat digital assets and what format should it be governed under. And I think that will help not only the Indian government but most other governments.
Okay. And DeFi and overall tokenized system assets and stable coins. These are one of the top emerged use cases of crypto right now. So, what sort of clarity does this report give to these assets?
Yeah, so I think there is a lot of work that's happening now around stablecoins, and I would and stablecoins have broadly emerged as this new money movement and payment system that's there. And what it allows for is for three things. It allows for excellent local payments. It allows for holding assets in some currencies, including the dollar, and then it thirdly allows for extremely fast cross-border payments.
Yeah.
In that lens, it tries to change how money moves globally. And at least from the context of India, the third part, cheaper, faster, better cross border payments, are really a game changer. Uh, the report talks a lot about stablecoins and how stablecoins should work, how banks should deal with stablecoin issuers, etc., etc., etc. And all of that is important as we start thinking of stablecoins as the new payment rails. So allowing for such things in the report and in the Genius Act, I think primarily opens up stablecoins. For DeFi, it is trying to lay the foundation of how various things can be built on top. But I think we will only see as time progresses how the broader crypto community reacts to the report specifically for DeFi. I think there are various other nuances that are still missing and various other product layers also that are still missing for DeFi to pan out. But for stablecoin, it's a clear game. Like stablecoins are a clear game changer in the regulations and the report are very clear directives as to how large entities and existing entities should deal with stable.
What are the use cases, core use cases for a general purpose user in terms of DeFi and also tokenized assets?
Correct. So let's talk about stablecoins a bit. Because DeFi are very broad. We'll just take one example of a stablecoin. Uh, you can think of a stablecoin being issued as something very similar to what we had in India, like the Paytm wallet or the MobiKwik wallet or the Freecharge wallet, uh, about 8-10 years ago, right? Where you could load up a wallet. That wallet will be able to give you some amount that's digitally represented, and then you could use that amount with the merchant, whoever would accept money on that wallet, right? Like an Paytm wallet, MobiKwik wallet, all of these wallets were prevalent everywhere about 10-12 years ago. And if you remember, wallets actually completely changed how India digitally transacts till UPI came in, and then UPI even accelerated and made it more open.
Yeah.
So, on the one lens, stablecoins can be thought of as UPI plus wallet as a payment system for the entire world. So, that's the first part. The second part of UPI can be thought of, or the second part of stablecoins can be thought of as a format of, let's say, you putting money in a Paytm wallet and you also earning interest.
Yeah.
So that's the second angle, except that you are now putting in money and it's going in the format of dollars and you are earning dollars on top if you are going to put money in a dollar backed stable. You could do it similarly for anything else. So it's the format of a digital savings account for all practical purposes. That's the second implementation. And the third implementation or the third use case of this is that because this uh, stablecoin is available everywhere and it's acceptable everywhere across the world, it's like a Paytm wallet or a UPI that can be used in any country.
Yeah.
So just like how you can do UPI payments here and your local street vendor can collect it. Imagine you sending money via UPI to your cousin in the US and your cousin receiving it immediately, just like how a person gets it right now. Today, this third part is not doable at all, but stablecoins allow us to do that. So these use cases reduce time, reduce cost, improve speed, and improve settlement, and that allows for money movement to be more seamless globally.
Yeah.
And once money movement becomes seamless globally and low cost globally, it opens up so many avenues of services that can be offered globally and goods that can be offered globally. And that's the game changer part about stablecoins. They are a completely new payment system that enables seamless flow of value in the age of the internet.
Now let's talk about India a bit. What do you think, is fragmented oversight hurting the overall investor sentiment in India? And government has in recently in Parliament said that it is not at all planning about the regulation. So, what is your opinion on that?
No, I think it is for sure hampering the investor appetite and investor sentiment. But I think, Manoj, partly because the problem is that the ask for the government is also very large. Right? You're asking someone to regulate all of crypto together. It's like saying regulate all of finance in one go and you don't even understand how finance will pan out. It's impossible. So just like how regulations in finance came step by step, there was a currency regulator, the securities regulator, the insurance regulator, the payments regulator, and all of these came step by step in India. That's an ask that's maybe a more reasonable ask, where the ask from the government and from the regulator should be okay, why are you wanting to regulate all of crypto together? You got some framework for all of crypto today, which is the taxation framework and the PMLA framework, which is great. Now let's start taking exceptions from this broad rule and start regulating them one by one. So I think that's the thought process where things are moving towards. And the MiCA laws that came in Europe and now whatever is happening in US are actually directionally that exact approach. That instead of regulating everything, let's break it down and start regulating it piece by piece by piece and giving specific exemptions to piece by piece. For example, I actually don't see any reason why stablecoins should be regulated by the RBI as just an alternate currency. And maybe what happens is that just like how there is the 81, 82 framework that allows for some entities to become currency traders, there is an ADVDA framework that probably comes up that allows for some companies to become stablecoin dealers, authorized stablecoin dealers in the country, right? And that can create a framework for regulations for stablecoins. Similarly, there is no reason why the SEC can't start moving towards allowing money market or moving towards allowing mutual funds that start holding Bitcoin as long as they're making sure that custody is clear and transactions are clear and money is safely kept and so on and so forth, right? So I think an evolution is happening on that front and it will happen slowly, slowly, slowly and then suddenly.
So considering, our neighbors like Pakistan and even Bhutan going big on Bitcoin and, building crypto reserves and mining, is it as a stakeholder in crypto India ecosystem, is it, depressing sort of that the government is not moving up to the expectation of the industry?
Yeah, I think it's unfair for us to compare it with others because every country has its own nuances and every country has its own problems and challenges. So let's again talk about stablecoins, right? I actually don't think we need stablecoins in India for local payments. We've got UPI; it's the best instrument in the world. I don't think we need stablecoins for holding dollar assets. I think that's ridiculous. The Indian economy is doing much better.
Yeah.
General, as an asset appreciation from an asset appreciation perspective. But I do think we need stablecoins for cross-border payments because India is
Since is big part. I think India is the second largest country.
no, India is the largest remittance receiver.
Largest country.
It's twice the size of Mexico, which is the second largest remittance receiving country in the world.
Yeah.
So I actually think that the conversation should stop being that hey, India is not moving like how Pakistan is moving or like how Bhutan is moving. Because that's a pointless argument to make. Bhutan has its own problems, Pakistan has its own problems, and they are trying to solve their own problems in their own ways. We should stop comparing and making these general statements and start saying, okay, what's the problem that we have? And is this technology innovation truly an innovation that can help us solve that problem? If it is, then we should go ahead and adopt it. If it's not, I don't really care whether we adopt it or not.
The government was expected to, come up with the crypto paper last month only, in June, in fact, and then July was expected, and now August has started. Has there been any, recommendation from your sides on the stablecoin part or cross-border payments to include all these key points in the crypto paper?
So we've of course not spoken to anyone regarding the paper because that's something that's happening right now internally. And the point of a discussion paper is that after internal consensus, they will send it out for external feedback. Having said that, we continue to work towards trying to educate people across different parts of the government, whether it be people in the payment setup, it be people at the RBI, it be in the Ministry of Finance, as to how these technology changes are now improving people's lives world over. I do hope that there is a mention for stablecoins and similar instruments in the discussion paper, and there is some work that might be happening on that front. But I actually have the same amount of information as you have, and all of us are waiting for the paper to come out.
The government in the parliament said that it saved around, it generated around 437 crore in crypto tax in FY24. And it is also saying that it is applying AI tools like Nudge and Project Insight to help the government collect higher tax. So my question is crypto, contributing, how much tax is the crypto contributing to the government in India?
So I think tax is just one angle to look at it. Of course, like the amount of tax that crypto is contributing is already known. It's about 400 and something crores. The question, I think the right question to ask is, what is the value that crypto can create for India? Uh, and uh, and just at the back of my hand, like if you forget all of crypto and just talk about stablecoins, and again I just keep on ranting about stablecoins because I think it's very important for us to focus on things individually and take them ahead as they grow. Indians collectively receive remittances of about 130 billion every year. If you collectively take all import, export, and remittances, it's about 1.7 trillion that Indian companies, businesses, individuals are sending or receiving every single year. $1.7 trillion. It's about roughly a third the size of our GDP. Uh, we pay 3 to 5% fees on it. Indians collectively are paying 25 to 30 billion dollars in fees.
Yeah.
It's an insane amount. That's peanut. Like the amount of taxes that we've collected is not even worth mentioning against this large amount of money that is being wasted in the current setup. So just opening up and talking about stablecoins can help us try and optimize this 25, 26 billion dollars, can potentially bring it down from 25, 26 billion to 4, 5 billion. That's $20 billion worth of just fee reduction value add to the economy. Just fee reduction. Imagine what more things can happen in terms of opening and broadening the economy up and solving for problems that Indians can solve.